Good afternoon, everyone. I think when people think of mining nickel, I don't think many people think of Vietnam straight away. So I hope to talk to you a little bit about our story today. I've been at Blackstone for 2 years, and I jumped as soon as I saw this story. I think it's quite exciting. I can talk about it a long time. I've only got the 9 minutes and 44 seconds, so I'll try and cut it as brief as I can. But if anyone wants to talk to me more about it, come see us. Our booth is just outside the door. So our investment summary. So we're building a 40,000 tonne per annum vertically integrated nickel production facility in Vietnam. It's a bit of a mouthful, but we're looking at mining sulphide nickel ore from the Khoa nickel mine and producing nickel concentrate conventionally as you would at any other nickel sulphide producing facility. Taking that to our refinery where we'll blend that with nickel concentrate, MHP and other products from other nickel producers around the world. To produce nickel sulphate and then ultimately into a precursor cathode active material, or PCAM, which is a product that goes into electric vehicles. So we're backed by a very large resource, of about 450,000 tonnes of nickel, including several smaller high-grade massive sulphide veins. And a key feature is really a very low carbon footprint. We want the lowest carbon footprint flow sheets in the world, and in the first quartile for our operating costs. It's just a quick snapshot on our board and a bit about the company. So we're listed on the ASX as BSX, but also we're on the OTC. We have market cap of about $70 million. We've currently got roughly $18 million cash in bank, seeing us funded through to the end of our DFS, which we expect to be completed around the middle of this year. So a little bit on the projects. So we've got the Khoa nickel project, which is our upstream mine. We've got a probable reserve of 48.7 million tonnes, which is JORC code for everyone over here, not NI 43-101. We have a 130 million tonne resource at 0.39 nickel, and also with byproducts of copper, cobalt and PGEs. The overall operation will have a low strip ratio and access to hydropower, which has helped drive our very low carbon footprint and low costs. The refinery, like I said, the DFS is underway, will be completed middle of this year. We've completed our piloting program and we're looking to produce 40,000 tonnes a year of nickel into nickel battery products. So this is a bit of a snapshot, visualising our overall business model. So we've got, on the left-hand side, you've got 4 main feed sources of nickel concentrates that have come to our refinery. We've got the Khoa nickel project in Vietnam. We've also got equity investments into the 3 strategics in Nico, which is a laterite in Western Australia. We've got Corazon, which owns the Lynn Lake deposit, historical operation in Manitoba, as well as an investment in Flying Nickel, which has got the Monago deposit also in Manitoba. Then we'll look to supplement that with third-party feed sources from the likes of the traders at Trafigura, who we have a letter of interest with at the moment with respect to supplying nickel concentrate and MHP, which will all come together into our refinery. That refinery will be a partnership between us and either a technology provider or one of the traders, and we're having a lot of engagement out of South Korea at the moment, and a lot of interest getting shown specifically with a very low operating cost and very high ESG credentials. So, touching on the ESG, so Blackstone has a pathway to zero carbon for our products. So the sulphide nickel is a key aspect of this strategy. Obviously, you can have a lot of nickel in laterites, but as most people are aware, that laterites processing require a lot more energy and a lot more intensive processing techniques. So sulphides are also generating heat, which we then use through our flow sheet. The vertical integration of the value chain allows us to minimise inefficiencies through transportation and make sure the flow sheet itself is actually fully optimised to deliver the battery products. We're using renewable power wherever we can. So when we're looking at strategic investments, we're making sure we're having access to renewable power via hydro, wind or solar. And then we're focusing on the use of the pressure oxidation flow sheet. We're replacing fossil fuels in all our mining operations where we can, our planned operations where we can. We're part of the Electric Mining Consortium, which is a group of companies in Australia which is looking to accelerate the transition to electrification for mining. And we have a large corporate commitment to ESG. Again, back to why Vietnam. Vietnam is a very attractive foreign investment location right now. The overall foreign direct investment has grown since year 2000 of 1.3 billion up to 22.4 billion in 2022. Its cost competitiveness is second to none. It's got one of the lowest labour rates in the world at roughly average $3 an hour, which is half of that of China. We have access to very low cost hydropower through the grid, and very, very low capital intensity. We have access to the great renewable power, where the 50% of the grid is actually on renewable power, which obviously gives us very, very low carbon footprint and improving the attractiveness of our products to the final customers. There's a couple other ones as well. With respect to the Brownfields project, we have an existing mine, which is an underground massive sulphide mine and a small concentrator of 450,000 tonnes per annum. This has allowed us to really build a strong relationship with the communities, and we've been in country for, they're over a company of nearly 10 years now. And as a result, we've got strong relationships in both the community level and government level. So to our cost position. So we talk about just as sulphate here. The project will be making PCAM, or precursor material, but PCAM is very bespoke for different producers, for different technology providers. So the easiest way to compare is to look at a sulphate level. And so we're sitting basically right at the top of the bottom end of the first quartile. And we're sitting at about just over $13,000 a tonne to produce our nickel in sulphate, which is far more competitive for the likes of the Qinchuan nickel pig iron conversion to nickel matte process, which is sitting closer to $18,500 a tonne. So a lot of people are concerned about the future of the nickel industry and a lot of the cost of material coming out of Indonesia. Even in this scenario, we're very well placed to be competitive and make a strong profit. Look a bit about our ESG. So last year we completed a life cycle assessment with a company called Minviro out of London, and that's basically given us an overall carbon footprint for our products. At 9.8 kilos per kilo of kilos of carbon per kilo of product, that's the greenest and lowest carbon footprint in the world for producing PCAM. That's been independently verified by the Nickel Institute, and that was something which we are continuing to advance on. So we're looking at options to really bring this all the way down to zero. I don't have time to talk through them all today, but if you are interested to hear more, I'm happy to talk you through those back at the booth. A bit about our resource. So the Khoa resource is 130 million tonnes at 0.37% nickel for 480,000 tonnes of contained nickel. The Ban Phúc resource, 123 million tonnes, which is the main resource underpinning our mining operation, with 450,000 tonnes of nickel contained. With very, very experienced geological teams that have been working in country for decades. We've got quite a few additional targets directly around the Ban Phúc area, with increasing targets heading all the way up through to the border with China. Stuart's with us today. He's our exploration manager. He'll be back at the booth later. If anyone would like to have a chat and talk a bit more about the exploration potential, come and have a look. I won't talk you through the flow sheet in general. I'm a process engineer. I could talk a long time about it. I'll just say that you have a very conventional nickel concentrator at the front end, followed by POX, followed by solvent extraction. There's no novel technology there. It's all been done and operated for decades in the mining industry. It's a very simple flow sheet. All that's different is the first time it's been designed to be where you use directly with a battery processing facility. So there's no need to go all the way to metal. This is the shortest process to go from nickel sulphide all the way through to nickel sulphate and PCAM. Next 12 months for Blackstone. So we're going to continue to finish. We finished the PFS last year, and we completed our piloting at the end of last year. So right now we're looking at and focusing on the completion of our definitive feasibility studies. That's getting done by Wood for the refinery, as well as a company called GR Engineering, who's a West Australian, very experienced nickel concentrator builder, developer. We're then looking to really focus on finalising our partnerships. I got back from Korea just a couple of weeks ago, where we met with a lot of the different technology providers, as well as several OEMs, meeting some more of them here today, this week. And that's really our focus. We need to find the right partner, not just any partner. To be honest, to find a partner would be easy. It's about making sure we get the right partnership, which is best for us and our shareholders. So we're really taking the time to, my boss, Scott, has been back and forth to Korea probably half a dozen times in the last few years. And so we're building really strong relationships, and we want to make sure that we get the right partner for us. And then that's really aiming into a final investment decision later this year and to commence our development. Thank you very much.